So, good evening once again, everyone. Our usual Saturday evening session, and we are going to take a thorough look at the Nifty and various sectoral indices. I have three time frames. On my left, I have the monthly. In the center, it's the weekly, and on the right hand side, the daily time frame. We had the budget today, and it's very obvious, very consumption-oriented budget wherein the finance minister expects that there will be a consumption push which will help the overall economy. Time will tell us, that we will figure out. But our objective is purely, our subject, our intent, our objective is purely price driven, technical analysis and charts. So we will position ourselves based on what we read on our charts. So starting off with a monthly, this is on the left hand side. I would spend a little bit of time here because we had the month end. And if I turn it to bar chart, just to get an understanding, 1, 2, 3, 4, we had 4 consecutive negative monthly closes. Now last month, which was Jan, was more like a doji because towards the end we had a bounce back. This is the bounce back, right? So it was some respite. We had a decent 400, even more than 400 points bounce back. So it was a good close towards the end of the month relatively. Or else it could have been a pretty decent negative as well. But it was 4 negative months. If I evaluate the monthly chart on my left, of course, I can see a very strong, emphatic, strong uptrend. There's no doubt about it. It's not a downward trending long-term chart. It's an upward trending long-term charts, and it's going through a deepish correction. Now, the inhibition, the doubt will be, will it lead to further or not? This time will tell us. But till this point, this is the first day of Feb 2025. Till this point, what I can say is after April 2023, so almost after 2 years, we have a short-term trend momentum negative sink. For the last almost 2 years, there was no such sink. The sink was predominantly on the positive side. Now it has already synced on the downside. The way we read our charts, we like to see a momentum and trend sink, which is at this current juncture, it's on the negative side. The last time it happened, it was this area. The second last time it happened was in this area. And this is what we see. So if you ask me, it's not good because negative sinks increases the possibility of further downsides unless there is a turnaround. So monthly charts are in a negative sink. This is important and it's not very positive. Coming to the weekly time frame, we can clearly see that the weekly charts are going through a two-legged correction. There is no second thoughts about it. The last time you had a bounce back of this nature, this time also you're getting some kind of a move. What about the momentum? What about the momentum over here is predominantly down. What about the trend over here is also predominantly down. And so far so good, it's just a bounce back. You should not get too excited about it. All right, so weekly charts are also not giving us very significant strong signs of positivity as of now. So no respite. Come to the daily time frame. Yes, this looks impressive. On the candlestick charts, you can see this. Today's bar, you have to ignore the date because I think by the time it's Monday, the trading view software will update itself when it comes to the dates. So 1 minute. So see, it's very, I just have to now delete this annotation. There was an annotation on the screen. I have to remove that annotation. Please don't annotate. All right. So I was talking about this last bar's date, which is today 1st of Feb, but TradingView will show you the 3rd of Feb. Ignore it. Their software will update it by Monday. I'm quite sure about it. So what do we have on the daily time frame? Let's blow out the Nifty daily and spend some time here. Should we? So we have a bounce back. We had a bounce back a couple of weeks back, and we had a meaningful bounce back. This was Trump and all. So when we see a downtrending chart bouncing back, an obvious expectation, anticipation, curiosity is where can be the immediate resistances. So first and foremost, I would look for some polarity principles. I would look for some fractal lows in the recent past. I can see a bit of a fractal low here, this area. That's exactly where the index is dealing with right now. As it goes further up, if it goes further up, this is a fractal high, fractal high, fractal high, and then fractal high, fractal high. This can be a very interesting fractal low. Let's spend some time on this zone. Not bad, huh? This is pretty interesting. So I was just looking for when the chart was falling, from where did they bounce back? And I was looking for fractal lows. So immediately this is the zone. The immediate fractal low zone is here. There is no second thought about it. And the one above that is this one. This looks really, really interesting, strong, and this takes you close to that 24,800, 24,900 zone. Too early to talk about this zone. I think at this juncture where we stand, what we will see, if I bring in my momentum indicator, I will see positive momentum reading and the short-term trend has improved. So I have a positive sync on my daily chart. This is good news from the daily charts point of view. Still not so good news weekly, still negative on the monthly. We should not forget that. So the important thing from a bullish point of view is to sustain. Please do not give back or retrace 100% of the recent gains. A healthy sign is you go up a certain distance, you give back much smaller distance of that, and then you gain further up. In typical Elliott wave principle language, we can say wave 1, 2, 3, 4, 5, that kind of a move. So this is the first move after a down leg. This was the last down leg. And this is a move after the last down leg, just like this one. This time, it did not sustain. This time, will it sustain? Going forward, next week onwards, this will be the key concern observation whether the market sustains or not. So I would like to, on a bullish point of view, I would like to see the market holding on to the gains, maybe sustaining above this 23,400, 23,600 zone, and then inching up further up, maybe towards this or this, whatever it is, on the bullish side. It won't be possible without the support of key sectors like the banks and the IT and the others. We'll take a look at them one by one. So going forward next week onwards, the objective will be, are you managing to sustain or not? And then you can slowly tend a little bullish from a momentum point of view. Till then, keeping in mind that the weekly, monthly charts are not good, it is not a very good idea to go overly bullish from a trading point of view. From an intraday point of view, you can do anything because it's finished on an intraday. From a long-term point of view, it's fine because you have got a very deep correction. The mid path, which is the short-term momentum trading, this is where you have to be extra careful and cautious. That's the Nifty for us. Now what we can do is we can take a look at the mid and small cap. Same monthly, weekly, daily. And you can see that the monthly charts are in sync on the downside. The weekly charts are pretty much synced on the downside. And the daily has given a bounce back. Similar kind of a chart, similar kind of a reading. And I would suggest that the similar kind of a conclusion also for the mid cap. Let's see whether you sustain or not. For the mid cap, this is the middle chart is what I'm talking about, the weekly chart. You will notice that over here, it's got a couple of lows from where it had bounced back in the past. Now the chart has broken below that zone. It has bounced back and it's now knocking this zone. If polarity kicks in, if this zone turns out to be strong enough, then maybe the mid cap will not be able to sustain above that. So it is knocking resistances. You need to be careful. Do we have similar kind of a reading on the small cap? And the answer is yes. We have a very similar kind of a reading for the small cap. But sadly, the bounce back of the small cap has not even reached this zone, which the mid cap chart has managed to reach. So all the charts are very similar. The monthly, weekly charts have deteriorated. The daily charts have given a bounce back, and well, you did bounce back earlier a couple of times, but you could not sustain. This time, if you sustain, then we might get the next leg. The next leg, if it comes for the small cap, for the mid cap, for the Nifty, for the overall markets, it's the next leg which will give you opportunities. So this is the time you look for opportunities, you get the charts ready. How can the market, sustain without the support of the most important sector, the bank Nifty, the banking pack? Now, I'll make it clean, the monthly chart. And over here also, you will see a sink on the downside, a pretty sink on the trend momentum on the downside on the weekly. So no, it's more or less similar, mirroring the view that we got from the Nifty. And the daily chart has given you a bounce back. You might start to notice, is this a double bottom? Looks like it. It's not a bad double bottom. If you ask me, close to that 48K mark, I would say the same thing. It has reversed the short-term trend. The trend momentum sink is there. It needs to sustain, not retrace too much and start heading towards a triple bottom and all that. Please, it's better not to do all that drama. And if you can just go up, then we can get the next leg. Does it have any kind of polarity to deal with? Yes, you have a 50K psychological polarity to deal with. When I say polarity, I mean that right on the charts, there were lows which were acting as supports. And so going forward, they may act as resistance. So 50K, keep that back of your mind. The Nifty Private Bank and the Bank Nifty more or less mirrors each other because most of the private sector banks has the maximum weightage. So this guy also is knocking close to this zone of resistance. You need to be careful on that. So again, same thing, same conclusion. I will repeat it again that yes, good move. Please do not retrace too much and give us signs of a revival of the second leg on the upside. This can be tradable. Private banks to PSU banks. Now PSU banks do not match that kind of positivity or do not match the kind of bounce back that we saw in the private sector pack. Starting with the monthly charts is not good. It's synced on the downside. Going down to the weekly chart, well, readings are not that great. Do we have divergences? It's very difficult to call this a divergence, a very strong divergence. Not really. I will say struggling. The pack is struggling. A lot depends on SBI. When I come to the daily chart, that is on the right hand side over here, I see that structurally probably it is, trying to make some kind of a triangular formation and breakout with a bit of momentum improvement. Again, when the first leg of bounce back for the PSU pack was this one. See, this was fine. So they bounced back before. Then they retraced. And they retraced around 50-60% of the previous move. And now they're just nudging. They're just trying to go further up. So the daily chart, the readings from the daily chart is predominantly inclining towards bullishness. If you take a look at the highs of the last 3 days, and the candlestick charts will clearly reflect that, it has very clean definition of short-term resistance. It's defined. The today's high, yesterday's high, day before yesterday's high, it's very clean. So those who are short-term traders in nature, for them a move above this level will mean breakout. Then if that move happens, sorry for those balloons, those are Apple reactions. So if this move happens, then probably you will get a move above that. And then you can say, okay, this was the first leg, this was the consolidation, now the next leg. And if that happens, of course, you need to keep an eye on all the PSU banks. And when you take a look at the banking stocks, it's always a good thing to look at it from a top-down approach. Take a look at the one which enjoys the maximum weightage and then drop down one by one. Finance. CNX Finance, Bank Nifty, more or less very, very similar. This is where your Bajaj Finserv, Bajaj Finance will play some role. Same thing. Monthly charts have deteriorated. Weekly charts are at resistances. Daily charts have given the first leg move. Now the time for retracement and next move. Now, one thing I notice here in the CNX Finance chart as well, and you would have noticed it with me as too. Can you see this? Yeah. So I'm not too sure if this particular chart, if this is added or not. I need to cross check if our trading view charts are, in fact, they are right or not, because this is the 1st of Feb and that's the 3rd of Feb. They probably have just some bug because this looks very unusual. I would go back to the PSU chart once and cross check. I think so. We have to negate this last bar's whatever trading view has come up with, because if I go by the dates, this is the 1st of Feb, same highs and lows, and just opposite, it's the opposite color, but the open and all the data, open, high, low, close of this day and this day are the same. So it's a bug. It's a bug that trading view needs to deal with. Nifty is fine. Let me cross check with my other software. I use a separate software. I had spoken about this, so I'll be able to cross check. Nifty is fine. Bank Nifty, our analysis is fine. Then we moved on to private bank. I think this is from where all the issues will begin. Yes. The views will not change. Don't worry. The views remains the same. It's just that we have to ignore the last bar. So it was very obvious to me when I saw back-to-back 3 charts showing like this. This is not usual. So bug, be careful. I hope trading view will sort it out. So the views are the same in terms of the PSU bank. Also, we need that breakout. Let's move on to IT. IT enjoys the second most maximum weightage after the banks and financials. Now, IT doesn't have a very weak long-term monthly chart. No. Direction-wise is positive. Momentum-wise, yet another early sign of a slowdown like it happened this time. Will it lead to a correction? The monthly? Well, there are some signs. If you go by the Japanese candlestick patterns, you will see, what is this doji? It's like a gravestone doji. If it had a little bit of a body, you would have liked to call it what is it called? Shooting star. Yeah, this looks like a last engulfing to me. So even if I go back to the conventional candlestick patterns, there are some signs of slowdown. Can this slowdown lead to a correction? Well, there are signs. Signs do not necessarily mean it will happen. But there are signs. So if it happens, those who have read the signs should not be surprised. So let's say today evening as we're reading the IT chart and we say on the monthly charts there are some signs, and after 3 months if we see the IT pack down, let's say 10 or 15%, then we should not be surprised because we did read the signs. Okay? So monthly, though not that bad, it has some signs of slowdown. That is getting reflected on the weekly chart because the weekly chart's trend and momentum are down. It's synced on the downside, which means any kind of a bounce back can be an opportunity. Daily, again, ignore this one. Ignore the last candle. That's some kind of a bug from TradingView. But The daily chart is struggling, and their struggles and consolidations, it tends to be very choppy and volatile. The last time it consolidated in this area, this time it is consolidating in this area. And this time when it is consolidating, this bounce back had some polarity in it. This zone, this high, this low, can you see this? So going forward, if it goes up, it needs to deal with this resistance and then probably inch further up. Earnings season, most of the top names have their earnings behind them. So dollar will play a role going forward. We don't have any trend momentum sink on the daily chart. So I will, going forward, I would say that we have to wait for prices to scale above this week's high before we get any clarity. So IT, I would say neutral. What about auto? Auto's week monthly charts, negative. Weekly charts have given a decent looking bounce back. Please ignore the last candle again on this one. And today's move was pretty good from the auto pack. Assumptions made, if you have more disposable income in your hands, you would like to spend it. I would request, if you are young, save it, invest it first in assets and not liabilities. And then you can go for some consumption. I know that does hurt the economic cycle, but times may be difficult. Means I'm just reading prices, okay? Weekly chart, selling is slowing down. Weekly chart, we have a positive hike in after a long time. Daily chart is in a sink. So I will use the same logic. No rush. Let's wait for the retracement and let's see whether it gives us the next move or not. If it does, then I'm sure auto stocks will give you, be it a four-wheeler or a two-wheeler or the ancillaries, will give you some scope. What about energy? Another important sector, but look at the sink of negativity on the monthly chart. This is some serious correction from the CNX energy on the monthly time frame. It's not an intraday chart, it's a monthly chart where 44,000, above 44,000 is down to 34,000, and also there's a seriousness of the correction that this pack has gone through. And even after such corrections, we don't see any clear-cut signs of improvement on the weekly chart or selling slowdown. Again, I'll use the word signs. Are there any signs that this can more or less be the bottom and we get a short-term bounce back? In this entire situation, we never got a meaningful bounce back. Again, there are some signs, there are some contrarian signs on the charts which can offer a bounce back. And if I take that to the daily chart, that sign on the weekly to the daily chart, then on the daily, I see a trend momentum sink, which is the first leg up. The last time when you went up, you did not sustain. The last to last time you went up, you did not sustain. So hopefully third time you'll be lucky. You'll give me a retracement and then maybe flare up and give me a short-term move. So same logic. So CNX energy falls in that same category. Metal. Before metal, okay, let me get done with metal and then I'll go to the FMCG. That will be interesting. That's what the budget was all about from a retail guy's point of view. Metal, however, monthly chart, not good. Weekly chart, not good. Signs, yes, there is a bit of a sign of momentum slowdown. Any sink on the positive side? No. The energy gave us a sink on the positive side. The auto gave us a sink on the positive side. The banks gave us a sink on the positive side on the daily chart. Metal is not giving us that move as of now. So wait, not so good. Now let's go to FMCG. Now this is where all the fireworks happened today. Ignore the last candle, some kind of a bug from trading view. Ignore that. But this is where you got some good move. Okay. Let's break it down step by step in a top-down manner. You've got the monthly charts struggling. Weekly chart, if you remember, in some of our class, we had drawn this fractal low. And we were keeping an eye, do we get some kind of a bear trap or not? Breaking the lows and bouncing back and all that drama. That's exactly what has happened. This is one of those charts where the trend momentum on the weekly has got in sync. By the way, didn't I just talk about a falling wedge and this sector is looking interesting from a contrarian point of view in the last week's class or last week's class? If my memory serves me correct, I think I have discussed this in one of our Saturday's session, that we should keep an eye on FMCG. This is one pack which has fallen first and is now showing some consolidation for a reversal. I think it was last Saturday. And good to see that what we observed is kind of playing out. So this is one chart. This is the first chart that we have found today evening where we have a trend momentum sync on the weekly time frame, a trend momentum sync on the daily charts. Ignore the last huge candle. So you can, from a momentum trader's point of view, you should approach it from a bullish point of view. Consumer durables had a tough time. However, monthly has just got into a negative sync. Weekly clearly negative with a pullback. Daily is just positive. So consumer durables is not as pretty as the FMCG sector. Chart wise, consumer durables, it seems still it will be difficult. We did see some serious correction there from stocks like Havells and Voltas and all. But Titan was showing some strength. So I will not get into stock names. But it's not as strong chart as the CNX FMCG. Okay. Two more left, Pharma and Realty. Pharma is just bending down, momentum is down. Pharma has given you a 1, 2, 3 ABC kind of a correction on the weekly. Pharma is synced on the downside with a bounce back. Pharma is also not synced on the daily. So Pharma and metal you can keep in the same plane, in the same category, that they have long-term weak charts with the daily charts not improved as much as the banks and the auto and the FMCG, etc. So Pharma, I would suggest to stay away. Last, Realty. Monthly, not good. Weekly, beautiful sync on the downside with a pullback. Daily, similar to most of the market sectoral indices, a sync on the upside. Now, the extra disposable income, consumption, will it trickle down to real estate as an asset class? Not a bad idea. We will see whether that happens or not. But the Realty chart has gone through recently a huge rally. And it's going through a bit of a retracement. Things are not completely pretty here. But again, the same thing which I started today's discussion with the Nifty. You have a sync. You wait for the retracement, because the degree of the retracement, the size of the retracement, the time it takes to retrace, which are the stocks and the sectors that retrace, are very important. If all of a sudden we start to see again strong selling pressure coming in next week onwards, then it will be difficult for the bulls to, make use of this recent bounce back. The bulls have to make use of the recent bounce back, sustain, consolidate, move further up. So, Realty, you need to give yourself a little bit of time here. So, that's our usual end of the week sectoral analysis. The short-term bounce back in the Nifty, Bank Nifty, private banks, auto, energy, FMCG, and Realty are giving you some scope, some hope that maybe we may have another leg on the upside. Though the higher time frames are not strong, so do not keep a very big expectation. Dollar will play an important role. Crude may play an important role. So we need to keep an eye on those as well. Right? That's it for the sectoral analysis.